The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, welcome on back here to the Diagnostic Trading Hour. Market's getting hammered right now. We got the S&P, it's down 19.5. We got Russell down 17.8. NASDAQ down 48 points. The Dow is currently down 133. Triple-digit plus drop going on in the Dow. And we got oil is up $2.83, almost 3% on the day. We got natural gas down about 0.5%. We got corn down 8 points. We got soybeans down 9. Euro dollar is currently up 13 pips. Aussie dollar down 69 pips. Pound dollar down 44. Dollar CAD down 3. Dollar franc down 43. Euro yen is down $1.49. Pound yen is down $2.22. A massive drop right there in the pound yen. Dollar yen down $1.34. Gold is surging on up. It's up 26 points on the day right now. We got silver up over almost 2.5% right now. And copper is actually relatively flat. So with all the stuff going on in Syria right now, worried about possibilities and oil disruptions. We're seeing oil surge like crazy. We're also seeing all that stability lead into the market starting to fall off. And then, of course, there's a lot of consensus that the Fed will begin tapering this coming month, right here in September. So what's one of the reasons for that? Well, one of the reasons we have for that is, they don't have a press conference scheduled. They only schedule press conferences on 4 of the 8 meetings, and they don't have one scheduled in October after the Fed announcement. And so it's highly expected that they will be making their announcement this coming month if they're going to begin the tapering. And then the absolute unknown factors of what's coming up next year, considering not only Bernanke stepping down, but 4 other positions in the Fed right now, voting members in the Fed looking at resigning, not returning. So you're going to have just a whole new Fed, no matter what the outlook is, no matter what the consensus is, no matter whether they think they should get rid of QE, raise interest rates, leave QE forever, and keep interest rates low or whatever. No matter what that consensus is, the whole dynamic will change at the beginning of next year. Because, like I said, 4 key members dropping off, and then they got Bernanke also not coming back at the head of the helm. So he's stepping down as well. So you got, people retiring, just not returning. And that's going to, it doesn't matter what they say, because everything can change. And so that has, investors obviously very, very nervous. Let's go ahead and look at what news we have. This is not a heavy news week, though we do have a couple high-impact news reports that we need to be aware of. And let's talk about those, help you get your plan together. We have the consumer confidence. That report came in this morning positive. Obviously, that didn't do much to help the market. It came in at 81.5 on an expectation of 79.6. And then we had the Euro-Dollar German IFO business climate report. That came in better than expected as well. Euro-dollar has been able to hang on to its gains overnight, still up about 13 pips. Now, let's go on. Let's look at tomorrow. Tomorrow we have pending home sales coming out. So, and then there's, even over in Australia, they're going to have their new home sales. They're going to have their private capital expenditures. So we ought to be getting a little Aussie yen with all the announcements coming out, some Aussie yen volatility tomorrow night. So Aussie dollar, dollar yen, Aussie yen. So you ought to be able to take advantage of that. Pound yen, euro yen, whatever. Tomorrow evening for you nighttime traders. And the pending home sales is going to happen tomorrow at 10. Probably looking at butterflies on that in case some more crazy news comes out. That's the big thing to be aware of, is the crazy news policies. What's going to be coming out with everything in Syria and all that. Other than that should really be a quiet week. So today's definitely bucking that trend. Looking on over at what we got tomorrow. Tomorrow, we have, Thursday, we got the preliminary GDP in the U.S. That's going to be the big U.S. announcement of the week. So be ready for that one. At the same time, we're going to have dollar CAD. We're going to have $3 reports. We're going to have 3 CAD reports all coming out at once. So that should provide plenty of volatility there in the morning. Again, that's an 8:30 12:30 report. And then that night, there's like 6 yen announcements coming out as well. So with all that, we got to get plenty of yen volatility happening and make that 7. So we're rolling over. They have one more at 1 a.m. on Friday. So a lot of yen volatility going on that night. We ought to be able to take advantage of that. So hopefully you're able to hop on in the evening if you're a nighttime trader. That news ought to give you at least some volatility you can count on with that many news reports coming out at once. And let's go ahead and look on over at Friday, see what we got going on there. Friday we got GDP coming out of Canada, so that'll be the big announcement there. Also 3 USD reports happening simultaneously. There'll be some British reports, some European reports happening Thursday night, Friday morning, early morning there. So that'll add to a little bit of currency volatility for you. And then a little bit later, early morning, late afternoon there, or early, right before the afternoon, we're going to have the Chicago PMI. And Bullard is just speaking away. He's coming out and making a whole lot of speeches left and right. He's got one tomorrow, or Thursday night. He's got one Friday morning. And then we'll have the revised University of Michigan Consumer Sentiment Report. So after we look at all those things, let's go ahead. Let's look at some stats, and we'll pull those together. I'll work on getting that together for you in between now and that, because we really only have 2 highly tradable reports this week. And basically the way I define that are reports that I can pull consistent stats on in order to be able to place trades. Okay? So we'll have those up. We'll look at those here a little bit later. Right now, let's go in and let's see what we might be able to find today. Let's see here. And pull this on up for you. And we'll go in, we'll check out our scanner here. We'll scroll on down. Let's pull up our gold and silver contracts and see what we got. Okay, so right now, surprisingly, nothing's showing up. If I don't see anything, you know what I do? I hit reset filters. That, of course, is going to show me everything. And then I pull it on down to like the next 30 minutes here. That'll bring it on down. Then I started seeing where everything's at. I'm like, okay. And then what I'll do is I'll go in and I'll put this like at 4.96. And that'll really narrow it down for me. Right there, because it'll drop all that stuff out of the way. And let's see, let's make it a little bit more. 4.95. 5.95. All right, so we're seeing that everything's basically on the line right now is what's going on. So we basically just have an at-the-money strike, 14.20 on gold. So which doesn't give us a whole lot to work with right there. We can get it open. We can get it ready just in case. Like I said, just in case that might be a trade that we want to take advantage of. So, once that's up and running, then we can click on it and we go, okay, let's look at it. Looks like gold might be trending up or down, whatever. Let's click on that, open that ticket up, and we'll take care of that. There we go. And so once you've opened the ticket up, then go on in, and we're going to look a little bit more detail at this chart over here. So we got the 14.20. And let's see what kind of distance we're getting on that. We're not getting much at all. We're only getting 0.3, 0.7. Now we're 0.7. So we are getting some negative noise on the volatility there, on the market noise. So I like that. So we do have at least 5 ticks, but we also have a solid 15 minutes to go. Okay? So again, we got a solid 15 minutes to go on that. That's more than enough time for oil to bounce around and come back on up. So we're going to give it a minute or two. We're going to see what it does. If it does it turn around, does it start trending up, does it start bouncing around before we hop in on that one. But just to give you some advance notice, the one I am watching right there again is the 14.20. So 14.20 right there. But not quite yet. We still have quite a bit of time. Now, one thing I have talked about in the past is hopping in on these gold trades a little bit earlier and going for like a $20 move. Okay? So the advantage being we can actually lower our risk on the trade and eliminate the 2 hour the dreaded 2-hour time frame there. So that would be sort of the kicker on this. I'm just not seeing the move down that I want right now. I want it to break a little bit lower and for me to get in on that trade. So right now we're still ticking up. We haven't broken that most recent high right there that we got here in the last 20 minutes here. So I'm just sort of watching that chart really close, trying to see if it's going to turn back around for me so I can take advantage of it. But if I decide to, then what I can do is I can hop in on the trade and go for, $20. A lot of times we're selling these things for 20, right? Or we're buying them for 80. So if you can sell it for 40 and buy it back at 20, or buy it for 60 and sell it back at 80, that's not necessarily a horrible trade. So I do want to see the price going in my direction, though. I don't just want to place it purely on price. I want the chart to be, confirming the direction of my trade. So if I was doing this, I'd go in here and I'd say do a sell, and I put my price in, get everything ready. Okay, so that's one of the things you want to do, is get everything ready right there. Put in my quantity, whether it be 1 or 10 or, whatever amount you're comfortable trading with. And then you can click here to update your price to the most current price. And once it starts ticking back in your direction, you place your order, but then put your buyback, say $20 lower. So let's say we go in right now, we see it ticking down a little bit, and we go in and just say, place an order there, get in that trade. As soon as we're in, we go over here, and we put a buyback on it. Okay, just click that button right there. It'll open it up for you. And say, buy it back for, we go ahead and say 14. Okay? And put that order in. Now that's working for us. All right, so not only do we have our sell in, we have our buyback in, make our, $20 that we like to make on the trade. But if it goes up and it hits our strike, okay, then we can hop out right around $50. So we sold it higher. So we're risking 16 to make 20. That's a lot better deal. So that's just one of the ways that you can start to play with these premium collection trades. When I roll it out, I sort of teach it to you, and here's the simplest, quick way, boom, to play it. But I also like to teach you, a variety of ways to play it. I've even seen some guys I've been talking to, they go in and they're like, well, what I want to do is I want to set it up to be a 1-to-1. Or maybe even a 1.5-to-1. They'll even risk a little bit more, but they don't want to risk a whole lot more. So if they're risking 20, or say they're going for making 20, then they want to, they'll risk $30 on the trade. And so if it comes up, they hop in, they get it ready. Now, what do you do to get ready? Same thing. You already have a working order, right? So click on your working order right here. And right on that, and then that'll open up an amending ticket order for you. Okay? And then you can close it out if it gets up and it actually breaks through that strike. But you can have it ready to go. All right, we'll stay right there, and we'll be back right after this break.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
TFNN has just announced our first ever virtual trading competition, and we're giving away $10,000 in cash prizes, and it's free to enter. Sign up by Thursday, September 5th at noon Eastern, and the trading competition will take place the following week, Monday, September 9th, with first place winning $3,000. Don't delay, as you won't be able to register once the competition begins. Sign up now and reserve your spot in TFNN's $10,000 virtual trading competition. To sign up and for all the details, log on to TFNN.com.
Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks. Welcome on back here to the Diagnostic Trading Hour. And so we're looking at that position. It's just right on that. And doing an update on the ticket scanner. We're actually working on doing a direct pass-through for upcoming stop order plug-in. So that's causing a little weird thing right here on the scanner. But once that gets updated, then we'll be live and ready to go. And I can't wait to get stop orders up and running on it. So pretty exciting. We've been wanting that for a long time. So once we can do that, then we'll be able to do automated stop orders. And that'll allow us to do a variety of different trading strategies. So anyway, so if it does go up there, and we have that, 1-to-1, so we're looking for making 20, risking 20 on the trade. Just make sure that you have your ticket open to be able to get out if it's down 20 on the trade, okay? So, and what I do, again, I just do another tear-off ticket on the other side, or what I do is I'll go in, I'll take my working order, and I'll make that a tear-off ticket, okay? So if I take my working order a tear-off ticket, and it gets down 20, then what I can do is I'll leave the working order there. So if it goes down, hits the profit, then I'm done. But just in case, what I'll do is I'll have it open, and then I'll put in, say, if I'm going to do is 20, if I got in at 34.50, I could put this thing up at 55, 60, whatever, just to make sure it's more like a market order. And then if it gets up there, it breaks through my price, then I can hit amend order. It'll get me out of the trade instantly. So really quick. But just to be ready for that trade. So because it keeps going right up right to 14.20. Remember, we sold 14.20 So that means at or below 1420, we're actually profitable on the trade. Again, the advantage here is we've allowed ourselves to have a little less total risk, like max risk on the trade. We've also allowed ourselves the ability to get out of the trade should it go in our direction before expiration, versus having to hold it for those last 2 minutes at dark zone of those last 2 minutes where there's not really many, if any, quotes where you can get out. So, but just having that ready makes it a really simple trade to do. So, and that is probably one of the biggest keys and one of the biggest mistakes. People go in and they go to get ready once it's already done its thing. And you don't want to be doing that. You want to be ready before it gets there, okay? So, be one step ahead of the markets, not one step behind the markets. All right, well, let's look at a few things going on right now because gold keeps just bouncing right off that level. We'll see. And, if you think it's too close, don't forget, one of the things I always teach you, if it's too close, you can always bell. All right? So it's not a fear thing. These are, this is a bit of a style trade going in and doing this premium collection. It's not pure system. So I love system. And most of my trades are system-based. But, trades like this are a little bit different because you're dealing with a sort of a breakdown in premium collection with minutes to go. So, let's see here. Let's look on over here at oil right now. We got oil is hovering right now at 109. So, oil all the way up here. And just some big moves on the day right there. Sitting right at the 2 deviation level. So again, that's right there at the 2 deviation level. Let's go in and let's look at the major indices. We got the S&P sitting right now is almost down at 1.5 deviations. The index is just falling on down and is continuing to move down. Next move should be 1630.75 for ES. If it decides to keep going, a 2 deviation move right now would be 1623. So again, a 2 deviation move would be 1623. And, I'm just looking at this, trying to see if there's anything else we can take advantage of. But it looks pretty good so far. And let's see here. I want to see if there's anything else also we might be able to do. Sorry, give me 1 second. Pulling this up. And there we go. Okay. Sorry, chart took just a second to get open there. But ought to be rendering over on the screen now for you. And there we go. One more. Okay. So, anyway, so we got the S&P almost down to 1630.75. The next move will be for it to go down to 1623. And then let's see here. We'll go ahead and check out the NASDAQ. So, the NASDAQ right here looks like we're down 1.5, going on down to negative 2 deviations. So, 3060 being the next target zone over here on the NASDAQ. All right, we'll stay right there. We'll be right back after this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position, for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com. Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, welcome back here to the Diagnostic Trading Hour. We got silver right now. It is up 2 deviations. It is sitting right now at 24.64. And so, like I said, nice, solid move on silver there. Been trending up almost the entire time. Gold doing a pullback finally after that big move. And we'll go ahead and look back over at that gold chart. Let's pull that up right now. We got gold sitting on the December contract right at 1418.5. After running on up, so right to 1419.4 to the 1.5 deviation level, oscillating around that. Looks like it's going right down below it now. And moving on back down after a big run up today off the whole Syria oil conflict, dollar weakness. I mean, I'm sure we'll see some dollar strength too if they keep looking at this whole QE thing going on. And like we've seen over the last few days. Let's go ahead and check out our other indices. Let's go ahead and look at the NASDAQ and see where that's sitting right now. And we have the NASDAQ sitting down below 1.5. So it's moving on down to 2 deviations there at 3060. And then we have the Dow is moving on down. It's sitting actually right now at 1 deviation. It really hasn't broken up that strong. It's been a lot of time at it today. It's been at it since about 8 a.m. this morning and a little bit past 8 o'clock. But really since about 8, been right at 1 deviation and hasn't pushed down as hard as all the other ones. It's been propped up a little bit compared to the rest. So we'll see if it moves around. The broad market index, looking at that, we saw sort of a big pullback pull this up. We'll look at it real quick. And right over here, I mean, I'd had just this massive drop from overnight because the indices were just trending down all night long. And really hasn't, the market hasn't been getting worse as far as the broad market goes. So there's more shares going down than up hasn't really been happening. It's just sort of been flatlined all day. But we still just seen that steady decline, probably being the major heavy hitters that are sort of pulling the market down. We'll see, though, what happens by the end of the day. With that big decline happening and not seeing the majority of shares dropping any more than they already have, then the probability of having a bit of a pullback going into the close is pretty decent. So we'll be looking for that, probably a bounce here. We'll see if we get a bounce. I don't know if we'll get one like back up maybe to a deviation level or so, but I wouldn't be surprised to see the market do some pullback after that without seeing further negativity happening. Really, since the morning, we just seen the thing go sideways on the broad market. Usually you're going to see that continue to decline if we're going to continue to get a decline. Since we're not getting one, it sort of did a pull up, pulled back a little bit, really didn't make any kind of major headway on going negative, and sort of going sideways again. So, like I said, would not be surprised to see this thing go ahead and start heading on back up into the end of the day. Let's go ahead and look down, check out our ags. We got corn right now. Corn looks like it's down at minus 0.7 right there. So, again, minus 0.7 deviations on here. And we got soybeans that is just sitting right at that level. So I don't see a whole lot more happening there on that. Soybeans, we got down to almost negative 0.5 after running up to positive 0.5, hit 0.7, came on back down. So basically a one deviation down move on soybeans, and it happened a little bit later in the morning, which actually gave you a nice opportunity after the initial spike and pullback to potentially join in on that short move, dropping about 20 points over there on soybeans. So nice move there. It's like the indices are starting to tick a little bit higher as we predicted there, and looks like we're getting the same thing on gold and maybe even oil. Of course, oil has just been all about the up move. And let's check out that one more time. Like I said, I see some market noise going on. Let's see. We're looking at about a 96-97% move at 2 deviations. So I don't know how much more we're going to get, but I think it's gonna. I think it's going to be propped up pretty well for a good chunk of the day, right into the close there. Let's go ahead and check out some of our Forex pairs. We got Aussie dollar moved on down 1 deviation. Pretty flat at the moment. So just bouncing right now between 0.7 and -1. And let's go and look at euro dollar. Euro dollar moved on down to 0.5, ran on back up, has not quite made a full 0.5, but it almost made a full 0.7. So if you go like high to low, okay, and this is sort of one of those little tricks I always teach us, measure, like settlement right here to a deviation. You're going to get 71 pips. You go in and measure your low. Okay, so measure the low right there up to a high. You got about 77 pips. So we actually did get a full deviation move. Ought to be expecting euro dollar to be pretty exhausted at the moment and just go into sort of a sideways pattern, which it's been doing here ever since it hit that deviation move, since about 11 o'clock. And let's go on down. Let's look at the pound dollar. Pound dollar has had a little bit more move today. It moved on down a solid 1 deviation. Look at how it just bounced. I mean, it's perfectly off the 1 deviation mark. And it's run on back up right now. It's just hovering right around a half a deviation move. But a perfect 1 deviation move, that's what we're looking for each and every day. And once we got the pound dollar, let's go ahead and check out the dollar CAD. And then we'll look at dollar franc and dollar yen. So dollar CAD ran off to half a deviation, came on back down to settlement, just hovering around settlement. And just really didn't have a whole lot of movement on it, but it was at least a nice clean move from up to down. It wasn't choppy at all. And we'll go on to dollar franc. On dollar franc, it ran down to 0.7, flew back up to settlement, came on back down 0.5, 0.7, and is sitting right now at 1. So it had some definite big swings after a little bit of chop right there in the early morning hours before giving it a solid downtrend and just staying down. Right now, like I said, at the 1 deviation levels where it's looking to settle out at here pretty soon. And then let's go ahead and wrap it on up there with dollar yen. So dollar yen is currently sitting at the almost 2 deviation mark. So it's just been a beautiful, perfect, sweet downtrend ever since the settlement yesterday. You can just see that settlement price, and it just plotting, just going down, 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 all the way down over here, and moved down, like I said, a perfect 2 deviations. And you just don't get a better trend. When you get something like that, I mean, that's awesome. So, and like I said, we ought to be getting quite a bit more like that, hopefully, coming up with some of the other trades that we'll be able to dive into. And let me see what we got over here. I know I was pulling these up and getting these ready for you, and I think I have them. Let me see if I can pull them up here. We'll go in. All right, I was talking to you about, we had a couple things. We got the GDP reports coming out, right? So with those reports, we got the U.S. GDP, we got the Canadian GDP. On the U.S. GDP reports, the forecast, they're expecting it to come out at 2.3. Again, that's 2.3% here on August 29th on Thursday. Okay, and that is the forecast. If we get 2.6, that's going to be very strong for the dollar. Okay, if we get a 2.0, that's going to be very weak for the dollar. So just depending upon how this report comes out, it could definitely have a high impact on the dollar, because if we get a stronger GDP, that's more reason to back off of quantitative easing. Okay, which means less printing, which means stronger dollar. Okay. So 2.6, definitely strong dollar. 2.0, definitely a weak dollar. Forecast right now is 2.3. Now, what do we got for big movers and shakers out there? This is an 8:30 report. Not really the best butterfly type trade, but definitely look for the straddle strangle possibilities. And we really only have two that have the high probabilities for straddles and strangles. That'd be euro dollar and pound dollar. Euro dollar, usually 71% of the time moves 50 pips after the announcement comes out, with an average move of 60 pips from high to low, and a spike of 20 pips off of the report. So we expect it to sort of spike up 20 pips, maybe pull down 10 to 15, and then move on back up. But the average move being, again, 60 pips from high to low, and 71% of the time breaking 50. So as long as you can get a trade in there for 50 to 60, you go in and you get your risk right around $35, then you got a great trade. Pound dollar, we're looking at that one. That's same. It actually has the same probability. 71% of the time, it breaks 50 pips. However, it actually moves a little over 70 pips from high to low on average, and pretty much the same spike, 20 pips right there off of the thing. But we get we get a larger move. So you can look at both of those. Both of them have great moves. And pound dollar actually has a little bit more move. You just got to look and see, which one is better priced when you're looking at doing a potential straddle on the pound dollar and the euro dollar. I would definitely look at both of those, since they have very similar statistics. And again, if you can go with pound dollar, even better, since on average it does move, a little more than 10 pips more on average than the euro dollar off of the U.S. GDP announcement. The ones that move the least would be, if you were looking to do like a binary butterfly into the news, it would be like Aussie dollar and dollar yen. So dollar yen, only 17% of the time does it move 50 pips, and the average move is 45. So if you can get one in a 45 pip range, you got yourself probably a pretty solid report right there. Aussie dollar, 30% of the time it breaks 50 pips. The average move is actually 40. So it has a little lower average move, but it does break 50 pips about 1 in 3 times. So still not a bad move if you can get a binary butterfly on for around 40 to 50 pips going into the news, which means you'd leave the thing on until expiration. And if you can get that on in the Aussie dollar, that could also be a great potential trade. Now, what about the Canada GDP? That one's going to be coming out on Friday morning, right? So we can take advantage of that one. Again, that's Friday, coming out at 8:30 as well. And at the same time, we're going to have the core PCE price index. We're going to have personal spending and personal income reports coming out in the U.S. So you got a little U.S. volatility to add to it. Nevertheless, still not as big of an announcement as you would think, okay? The average move on this thing from high to low is 57 pips. That's their GDP. That's their average move. Dollar CAD right there. So 57 pips. And it only breaks that like 42% of the time. So I would be more inclined to go directional with the trade. It usually has about a 20 pip spike, okay? And we're looking for an average move of about 60 pips. So I'd let that spike happen, let a full or partial retrace come on back, and then I'd try to ride it and get 20 to 40 pips out of it, okay? But we don't really have the stats you'd think adding up in the USD CAD on that report. I was hoping that'd be a big one, but when we come right down to the final stats, it just doesn't look like a great strangle straddle play for you to take advantage of. And those are literally our big news announcements for this week. I mean, isn't that crazy? So it's a really, really light news week. Now, even though this news week was light, okay, next week, things are kicking off, okay? So what do we have going on this coming week? Well, we're going to start off on Sunday with building approvals coming out of the Aussie dollar. So that'll give you some nice volatility on the Aussie. Expect 20, 30 pips off of that. Then on the 2nd, of course, the U.S. is going to be closed. Nadex will be closed. Labor Day, bank holiday, my birthday. So so I always love having my birthday right on a holiday. That always worked out well growing up. And but also Canada will be closed as well. So Canada will be closed in observance of Labor Day, just like the U.S. That'll lower, of course, volatility across the board. So if you are trading Forex markets or certain markets on different exchanges that are open, just be aware of the very light liquidity that can cause large moves. Now that night, Monday night, everything's opening on back up. You're going to have retail sales on the Aussie dollar. That'll be opening up there Monday night, so expect again 20 to 30 pips, maybe even more with the lighter liquidity possible. But then at 12:30, and the cash rate, basically you have the interest rate coming out of Australia. So that's coming out at 12:30 on Tuesday. So really starting off the week with a bang there. And then we go on in, we're going to have construction PMI coming out of Britain at 4:30 on Tuesday. And then we're going to go in and we'll have the ISM manufacturing PMI at 10 a.m. on Tuesday. So that'll be coming out there. And let's see here. And so that'll provide us with some butterfly opportunities as well, most likely. Okay. And then we're going to have the GDP coming out of Australia on Tuesday. So big Aussie week. All right. So with all the announcements coming out there. And then scrolling on into Wednesday. So Wednesday, we're going to have the services PMI coming out of Britain. And then we'll have trade balance reports coming out of USD CAD on 8:30. And then Bank of Canada is going to have their interest rate statement. So remember, Australia is having theirs on Tuesday at 12:30 a.m. Bank of Canada is going to have theirs at 10 a.m. I'm reading all these in Eastern time. And then Japan is going to have their monetary policy statement coming on out sometime Wednesday night. And their press conference again sometime. So I can go in, I can pull those up for you. I guess we can look at them real quick and see, what are the possibilities. Because they're, basically what you do is you go in and go, when do they usually have the press conference? And so I say, okay, well, they have one at, the last time they had it at 3:30 in the morning, then they had it at 3:38. Then they had one at 3:40. Then they had one at, 2, probably time change 2:04. So about 3 o'clock is pretty much the time that you're going to be looking for that trade to take place. So, or not trade, but the press conference to take place. And as far as the monetary policy statement, when do we look for that to come on out? Give me 1 second. I'll pull that back up for you. I just want to see if I can get that information so you know when to what time they usually expect the monetary policy statement. And I'll cover that when we get back from this break, so you'll have that one ready. And we got some other statements coming out as well. It's a pretty big week of news coming up next week. Stay right there. We'll be right back after this break.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investor Investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, welcome on back here to the Diagnostic Trading Hour. Before we wrap up, we have a very big announcement. We're giving away $10,000 in cash, okay, for a virtual trading competition, which means that you do trade for real, but you trade it with virtual money, with demo money. So you can't lose any money by trading it, but you could actually make some. And people who say demo doesn't pay, well, it can. So what you need to do is hop on over right now. I mean, literally like right now to TFNN.com. Click on the virtual trading competition image. You're going to see it right there. Click on that. And the competition is going to run Monday, September 9th through Friday, September 13th. Okay? But you have to sign up by September 5th at noon Eastern Time. That's the cutoff time. If you're not in by then, you don't get in. You can't win a dime. And so, literally, why wait? There's nothing to do but fill in the form, okay? So, you'll fill in the form, you'll get an email to confirm your registration, and then what will happen is you'll be given a unique login ID and password to be able to log in for an account that's set aside just for this trading competition and trading on the Nadex exchange, okay? So whether you like to trade currencies, euro dollar, pound dollar, Aussie dollar, dollar yen, on down the list, whether you like to trade the indices like the S&P, the Russell, the Nikkei, the DAX, the FTSE, the Dow, if you like to trade, commodities like corn, soybeans, oil, natural gas, gold, silver, copper, if you like to trade any of those markets and you've been wanting to test this thing out, but you just haven't got around to it, haven't had the time, well, now is the time, okay? So you're going to want to hop on, you're going to want to register for this thing because you could actually win money, okay? You actually can go in here and make some cash. And what we're doing is we're going to do this 1 week contest, okay? There's some nice prizes. So every day we're giving away, $100 plus a book. And then we're also going to be doing a $3,000 grand prize. Second place, we're doing a $1,500 prize. Third place, we're doing $750. Fourth place, we're doing $500. Fifth place, we're doing $500. Sixth place, 7th, 8th, 9th, 10th, all doing $250. And at 1st through 20th, we're giving away different trading books for you. So again, hop on over here, check this out, register, and get going on it. Make sure you're checking out the additional education. Get a head start, okay? And the diagnostic scanner, I go in, I teach you how to trade spreads, how to trade binaries. Of course, I'm talking about it on the show. And I use this show to help you. All right, you have questions, you got to let me know. I trade this every day. So hop in here. How do I trade these spreads? Or this doesn't seem to be working right. What's going on? I thought I bought the spread, but I keep losing because it doesn't seem to be moving fast enough. And, there's just things people don't understand. They don't know. And so I can help you resolve those really fast. Just call in and ask. We'll go through it. We'll talk about it step by step. But there is a lot of, trading competitions. We're going to have 25. We're giving away literally 5 places a day. We're giving away $100 plus a book. And all the rules, the details on here. But again, there's 70 total prizes. I'm giving to 45 winners because some people are going to get books and cash. And 35 cash prizes on here, and anywhere from $100 to $3,000, and 35 copies of Tommy O'Brien's best-selling book. It's a great book, The Art of Timing the Trade. So it is an excellent book, and definitely recommend. That's just that right there will help you out tremendously in your trading. I love his analysis on volume, tying into fibs. But anyways, if you have not done it, right now, TFNN.com, click on Virtual Trading Competition and register before it's too late to register. It's free, but it's also valuable. Hop in there, check it out, and I will talk to you all tomorrow. Y'all have a great day.